Good morning, traders. Richard Miller here doing a quick Ichimoku cloud chart market update on Tesla. In the last update, Tesla was looking for support here at the top end of the cloud, and it sliced through that support zone. It did not find support at that level. It was quite a significant, important zone. The downside support targets are then the standard line here, this purple line here. That's the key level of support that it's trying to test yesterday. And the other level of support to watch out for is this bottom end cloud chart zone. So it will be interesting to see if Tesla will today rebound from this cloud chart level here. If we look at this zone there, 664, as well as this turning line here. That's also a cluster of support, 649. And what normally happens at these cloud chart tests, the market will test the support at that level and normally dip below it and then rebound from that. So there's a cluster of support, just provided Tesla rebounds back up from these levels and just close above the cloud. Yeah, that would be bullish, because price action into the cloud and then rebounding out of the cloud is still bullish. But if Tesla now closes and stays below this bottom end cloud chart zone, then the outlook changes from bullish to bearish. So we're at a critical juncture here for Tesla, and it needs to rebound from this bottom end cloud chart 664, 665 zone for us to remain ultra bullish on the stock. Bit of a risk there. There's a MACD sell signal here, so we'll see if that's going to pan out, but I do expect a test of this zone here. And today and next week's price action will be interesting to see if Tesla will rebound from the 664, 650 or 640 zone in trade. Now if we turn to the 4-hour chart, get a little bit more of a feeling as to what's going on, you can see it's spot on trying to rebound from this top end cloud chart. So it did that yesterday, digging into the cloud. Now these levels, we get these from the daily, and you can see how they correspond very well with the 4-hour chart level. And on the 4-hour chart there's another significant support zone down here. So the downside risk in Tesla is right down to about 630, 628. And if we dig into the cloud, we could sell off if it loses support there at 664, dig into the cloud and then bottoming out at 639, 628, and then rebound from there. But by that time, this is now going to be a new resistance zone if Tesla closes below the bottom end of the cloud. But so far, potential rebound zone, it is at a cluster, and it is quite a volatile stock, so it's not going to be easy to time the entry points exactly at these levels, but this is kind of a buying range. Anything from 664 to 628 is a swing trade buying range, and then when it gets to these levels, a successful retest of this top end cloud chart support level is kind of what I'm looking for. Now on the weekly, we can see the front end of the cloud failed a little bit there, and now there's this cluster. These lines come from the daily now, and then we can see that they digging in there, that line there, 639, is the standard line or the baseline of the cloud on the weekly chart. So that is a significant support zone, that's 650. So any kind of dip in that cluster of support would be can be a nice swing trade entry point. Now on this chart, the significant downside risk is this bottom end cloud chart level here, so 520, 480. And I think we'll get a rebound before we hit those levels, but there's a whole cluster of support here. It's very close to the front end cloud support zone, so it will be interesting to see if Tesla can come back today or next week and rebound from this cluster of support. On the hourly, now stuck below the cloud, we can see 664, these levels, and then on the hourly cloud, this bottom line cloud here, 650 is a major support zone that we can potentially rebound from on Tesla. So watch out for these levels: 664, 650, 649, and 685 level. Until next time, happy cloud chart trading.